Be ready. 5 seconds. Start. Madam Speaker, the government had made many positive changes in the personal income tax rate applicable to individuals in the last 3 years. Therefore, I do not propose to make any further change in the structure of the income tax rates for individuals. There is a great perception in the society that individual business persons have better income as compared to salaried class. However, income tax data analysis suggests that major portion of personal income tax collection comes from the salaried class. For assessment year 2016-17, 1.89 crore salaried individuals have filed their returns and have paid total tax of rupees 1.44 lakh crores, which works out to average tax payment of rupees 76,000 per individual salaried taxpayer. As against this, 1.88 crores individual business taxpayers, including professionals who filed their returns for the same assessment year, paid total tax of rupees 48,000 crores, which works out to an average tax payment of rupees 25,000 per individual business taxpayer. In order to provide relief to salaried taxpayers, I propose to allow a standard deduction of rupees 40,000 in lieu of the present exemption in respect of transport allowance and reimbursement of miscellaneous medical expenses. However, the transport allowance at enhanced rate shall continue to be available to differently abled persons. Also, other medical reimbursement benefits in case of hospitalization, etc., for all employees shall continue. Apart from reducing paperwork and compliance, this will help middle class employees even more in terms of reduction in their tax liability. This decision to allow standard deduction shall significantly benefit the pensioners also, who normally do not enjoy any allowance on account of transport and medical expenses. The revenue cost of this decision is approximately rupees 8,000 crores. The total number of salaried employees and pensioners who will benefit from this decision is around 2.5 crores. A life with dignity is a right of every individual in general, more so for the senior citizens. To care of those who cared for us is one of the highest honors. To further the objective of providing a dignified life, I propose to announce the following incentives for senior citizens, namely, firstly, exemption of interest income on deposits with banks and post offices to be increased from rupees 10,000 to rupees 50,000 as such. Secondly, raising the limit of deduction for health insurance premium and or medical expenditure from rupees 30,000 to rupees 50,000 under section 80D. All senior citizens will now be able to claim benefit of deduction up to rupees 50,000 per annum in respect of any health insurance premium and or any general medical expenditure incurred, and thirdly raising the limit of deduction for medical expenditure in respect of certain critical illness from rupees 60,000 in case of senior citizens and from rupees 80,000 in case of very senior citizens to rupees 1 lakh in respect of all senior citizens. These concessions will give extra tax benefit of rupees 4,000 crores to senior citizens. In addition to tax concessions, I propose to extend the Pradhan Mantri Vaya Vandana Yojana up to March 2020, under which an assured return of 8% is given by Life Insurance Corporation of India. The existing limit on investment of rupees 7 lakh per senior citizen under this scheme is also being enhanced to rupees 15 lakh. The government had endeavored to develop a world-class international financial services center in India. In recent years, various measures including tax incentives have been provided in order to fulfill this objective. To further this objective, I propose to provide two more concessions for IFSC. In order to promote trade in stock exchanges located in IFSC, I propose to exempt transfer of derivatives and certain securities by non-residents from capital gains tax. Further, non-corporate taxpayers operating in IFSC shall be charged alternate minimum tax at concessional rate of 9% at par with minimum alternate tax applicable for corporates. Currently, the income of trust and institutions is exempt if they utilize their income towards their objects in accordance with the relevant provisions of the Income Tax Act. However, there is no restriction on these entities for incurring expenditure in cash. In order to have audit trail of the expenses incurred by these entities, it is proposed that payments exceeding rupees 10,000 in cash made by such entities shall be disallowed and the same shall be subject to tax. Further, in order to improve TDS compliance by these entities, I propose to provide that in case of non-deduction of tax, 30% of the amount shall be disallowed and the same shall be taxed. Madam Speaker, currently long-term capital gains arising from transfer of listed equity shares, units of equity oriented fund and unit of a business trust are exempt from tax. With the reforms introduced by the government and incentives given so far, the equity market has become buoyant. The total amount of exempted capital gains from listed shares and units is around over rupees 3,67,000 crores.